Hello, this is Matt on the Moon Lambeau channel, and I'm going to share with you some very important information in this video. Sincerely, very important information. Now look, a big part of my message on this channel is that the everyday person, which by the way is me, there is nothing special about me, the everyday person can make life-changing money investing in cryptocurrency, but also even outside of that, and I've said this before too, it's just not even close to the thrust of my channel, but even just investing responsibly over a very prolonged period of time can result in you becoming a multimillionaire. Like, you understand this. If you don't know this is true, please keep listening. You can be somebody that's, just in the middle class, making whatever it is, $40,000, $50,000, $60,000 a year, responsibly over a span of decades investing, end up with millions and millions and millions of dollars. And I understand that this over a long period of time, where in crypto things should be much more exciting, and yes, I agree. That's part of the point I'm making. Crypto's way more exciting. There's way more opportunity here, right? But there are behaviors here that are going to inhibit people from achieving life-changing wealth. And please stick around for this. If you have the time, I'll keep this video as brief as possible, but please stick around if you have time. I talked about this exact topic, I don't know, only a few times on the channel. Maybe I should do more, honestly. I feel like it would be a better service if I bring it up somewhat more frequently, but this exact topic I last talked about much earlier this year, and it's worth talking about for sure. Probably a bit more than I have. It's about, I'll just tell you right now, here at the outset of the video. It's about how is your portfolio impacted if you are trading? If you're actively monitoring prices, but not just monitoring, acting on them. Like, what does that actually do to you? What does it mean if you miss some of the biggest moves in the market because you were trying to time things? That's exactly what I'm talking about. And it's going to change your perspective. If you don't already know this, it's going to change your perspective. And if you do already know this, well, then I'm glad and I'm happy for you. I'm glad you've educated yourself, but you need the reinforcement. We all do. Everybody needs the reinforcement. It's not the case that humans can just hear something one time or two times or three times and then it's just in there forever and we're never going to have some sort of emotional response to whatever it is that you might be conceiving in your mind. That's not how people work. It's just not. We need reinforcement. There's a reason when you're talking to somebody in daily conversation. You ever notice that there's a lot of repetition with people? You ever notice that? When you hear repetition from a person, it's because it's a point that's really important to them and they're conveying that to you, and maybe you should pay attention. That's what they're signaling to you. Well, that's what I'm doing right here, damn it. And I think you're going to like it too. But I do want to be clear at the outset that I do not have a financial background of any kind. I am not offering financial advice, and you should not buy or sell anything because of anything I say or write. I'm just an enthusiast who makes YouTube videos about crypto-related topics, but just as a hobby and just for fun. So here's a tweet from Robert Dobbs, who has 1.5 million followers. He tweets about XRP fairly frequently, I've noticed, and he's in a band called SVI Band. And here's what he wrote. What price did you buy XRP for the first time? Well, that's a fun question, actually. That is a very fun question. And here's chart analyst Harry at Geraldo XRP. And I've been following him for some time. Now, he's very well known in the XRP community for calling the very beginning of the biggest rally in XRP history, mid-December 2017, from 20-something cents up to almost $4. And on the very tippy top of that big bull run, on January 4th, the peak of XRP bubble inflating, he called it. He called it then too. You can look it up. This is true. He called it. January 4th, 2018, bubbles inflated. Hey, looks like things are going to cool off. He said something to that effect. He was right. He was absolutely right. So very well known. He's been in the space for some time. He bought XRP first at, looks like half a penny. That's what he tweeted right here. And I remember being here back in 2017 and thinking, my gosh, I wish I had been in sooner so I could have bought it half a penny. Well, my friends, and you'll see me as I go through this video, I'm going to illustrate this point. Like, how I felt in that moment years ago about Harry having the opportunity and having been informed and aware of XRP to such an early stage that he could have bought it that cheap. Like, that's how people will feel about us here right now in 2021. That's exactly how people are going to feel. I believe anyway. XRP even around $1 right now. I just have a feeling that could be right because there's utility with XRP, which I think will matter in the future, even though it doesn't sufficiently today. I think that's going to result in XRP having very long-term viability. I certainly anticipate that, and people will look back on you in the future and say, "My gosh, you had the opportunity to buy XRP at that price." Yeah, exactly. So he bought it at half a penny. I first bought XRP at, I think it was 21 cents. I believe it was 21 cents. And that was November of 2017, so almost 4 years at this point. And so I've just been holding. I've just been accumulating here. And you'll see why this is important. I'm going to get into it further, more deeply. Just please bear with me here. Here's a tweet. I want to highlight this one too because this one really resonated with me. It's from somebody named Crypto Kettner here in response to Robert Dobbs. And he wrote, again, the question, what price did you buy XRP for the first time? Crypto Kettner wrote the following. Sadly, around $1.50 in May of this year. Just got into crypto assets this year. Been rough, but I understand the cycles and I'm ready for the bear market and the next bull run. And I read this and I was like, ding, ding, ding. This is somebody who early on he's got the game. Like this guy, whew, you're going to tear it up. If you really understand it and you implement the things that you know to be true, I just thought, wow, this really resonated with me. Because look, I've never sold a single XRP in my entire life. And not because I'm like married to XRP. No, I think XRP makes a ton of sense for a ton of reasons. It's my largest crypto holding for a number of reasons, and it was in line with what I thought made sense for me personally from a risk-reward perspective. And I've talked about that ad nauseum for a long time. But yes, I've been all over the damn place too. Like, think about this. I bought XRP, and it ran up to almost $4. It then way later, in fact, in March of 2020, dipped as low as 11 cents. Well, if I could have magically known that, yes, I would have just bought everything at 11 cents, right? But I couldn't, and that's not realistic, and that's stupid. So I just kept holding over the whole period of time, and I'm waiting for this thing to rally outside of all of that price action, right? But I even saw it this year run up to about $2 and then back down to close to 50 cents. And I think that the best this year is yet to come. We'll see. But this guy really seems to get this here, which is why I'm talking about this. Bought, unfortunately, at a higher price. That means that this individual saw XRP drop, 66% lower than when it was purchased? Because, again, $1.50 here got down to about 50 cents, so somewhere in that region, but seems to get it. Looking forward to buying lower during the bear market. Wow. I don't think most humans get that. Now, I'm willing to bet you listening to this, you probably do, or if you're new and you're just trying to learn about this stuff, yes, this is true. And so take a look at this. Here's a headline from Markets Insider, and this is from July 30th of this year, 2021. And this isn't even about crypto, and it doesn't matter. It's about humans. It's about human psychology and how stupid humans are with their own damn money. And it's unfortunate for them. And so we're all betting against each other, right? I mean, if somebody's buying, somebody's selling, in a way, you're betting against each other. Yeah, fine, there can be somebody that's purchasing something from somebody, and perhaps the person that's selling it isn't actually fearful. It's more like, I feel great, and this is exactly what I want. Like, the stuff, again, I understand. But, in a general sense, if you're a day trader, you're probably going to have some trouble. So take a look at this. Day trading has become a popular hobby in the past year as investors around the world were faced with economic shutdowns and social distancing measures. Sorry, I just want to check something. But while day trading may seem like a fun way to make some supplemental income or even a potential way to earn a living, studies suggest the average day trader tends to do more harm than good to their investment portfolio. Shock, gasp. Ooh. Go figure. Go frickin' figure. Absolutely shocking here. But the typical retail speculator doesn't understand this. This actually is true here. So how about the numbers? Well, check out this. In a recent blog post, A Wealth of Common Sense's Ben Carlson highlighted several large studies that paint a very bleak picture of day trading as a whole. Pause. The reason I'm highlighting this, because again, they're not talking about crypto here. Doesn't matter. These are the humans that you're betting against. You understand, the humans speculating in other markets, like, It's the same human DNA that is so freaking defective that it's going to result in tremendous losses. Like this behavior. And look, these humans, they're what caused the volatility. So in that sense, I'm very thankful. Without these people being as ridiculous behaviorally as they are, I wouldn't have the opportunity that I have, and neither would you. They're the ones that caused this. And so I can't stop it. I can't cause it. I have no power of that sort. I'm observing it and saying, okay, you do you, I'm going to do me, and by that I mean I'm going to do nothing. And you'll see why as we go a little bit further into this. But check this out. There's 4 bullet points. Here's number 1. One study of Brazilian futures traders found 97% of day traders lost money over a period of 300 days. You were paying attention, right? 97% of day traders lost money over a period of 300 days. So and look, we've all done this. Look, this is not to pick on you. Everybody's done this, right? You've gotten to something, you felt emotional, you sold, or you're just thinking, oh, I can sell now and buy back lower. Well, welcome to being a human. You're normal, okay? Don't feel ashamed about it. You're just normal. But I want to encourage you to be weird, like Moon Lambo. Because you know what? Weird is better than normal, because normal means you lose money. Normal people, they lose money. They don't know what the hell they're doing in these markets. And I got to tell you a little secret that not enough people say. You don't have to be some sort of frickin' wizard to make money in markets. You just have to buy and hold. Do nothing. This is true in the stock market. You understand this, right? This is true in the stock market. Has it trended up for 100 plus years? Yes or no? The answer is yes. Then what the hell is the problem? Why do you have to freak out even during massive pullbacks? The same is true of crypto. We have 12 years of data points proving this. And fine, yes, I get it. There's 13,000 cryptos. Most of them probably go to zero. Crypto is more risky. Not pretending it's not. For sure. Crypto is definitely more risky. Worth monitoring and paying attention. But pay attention to market cycles, right? It doesn't mean that all of it's just going to magically go away. There's still opportunity here. And it also doesn't mean that when you're investing that you have to put a crazy amount of what you're willing to invest in anything into crypto. You could just add a small percentage just to spice things up a little bit, recognizing that there's now 12 years worth of data that indicates we're trending up. Go figure. Just like the stock market. I'm just saying, you do what you want. I'm not telling you to buy or sell or hold anything. These are data points. Here's the next bullet point out of 4. Another study of day traders in Taiwan between 1995 and 2006 found only 5% of day traders to be profitable. 5%. 5%. Do you think you're going to outperform the numbers? Like, you really think that you're the wizard? Because there's a 95% chance, according to just that one particular stat there, that says, no, you're not. I'm betting against you if you're thinking you can do that. Nothing personal. Nothing personal. I don't think I could either. I'm just saying. Third bullet point. A study by the U.S. Securities and Exchange Commission of Forex traders found 70% of traders lose money every quarter on average, and traders typically lose 100% of their money within 12 months. Folks, do you want to be in that lump, or do you want to be in the group that does nothing? And then over time, sees things go up in price. Like, my gosh, there's a reason that I've been through everything I've been through with XRP for almost 4 full freaking years, and I've never sold a single XRP. It's because I understand this. I understand the human psychology. And fine, if I'm wrong, maybe I lose everything. Do you think I'm wrong, or is it more probable I'm right? Because I'm just looking at 100 years plus of human behavior in the stock market. I'm looking at 12 years of human behavior within crypto, and it looks to me like things are probably going to go up, especially with crypto, with the market just moving in tandem, and that's provably true. Fourth bullet point. A study of eToro day traders found nearly 80% of them had lost money over a 12-month period, and the median loss was 36%. Womp womp. And so, look, to those, the small percentage out there listening that's actually good at trading, good on you. I just don't think that it's good for the masses based on the data. Good for you if you're good at it. This is not a dig on you. But it is a heavy critique on this idea that getting in and out of positions, and this idea that you can just sell and then buy back a little bit cheaper, and this is going to make you make more money. It's BS. It's complete BS, and the data bears that out. Fine, you get lucky a few times, you feel good about yourself. Oh, I'm a wizard now. No, you're not. You're definitely not. Good for you for not getting wrecked in that exact moment. Good for you. But the data says you're gonna at some point. And so for me, what do? Knowing this, Nothing. The unsophisticated approach is the best approach. That's my personal, for the typical person. And I'm a typical person. There's nothing special about me, which is why I do that. I do nothing. I do absolutely nothing. I just sit there and hold. That's it. And since I know this, I know these data points, I don't get bothered by any of this crap. Of course I don't. Hell no, I don't. And take a look at this. And this is going to illustrate, I kind of wish I should have just led with this. I'm going to have to talk about this again in a video soon, because like this is so important. I can't just leave it towards the tail end of a video. Not only, like I'm obviously going to cover it here, but I'm going to have to bring this up again in the somewhat near future. I'm going to have to, so expect that. I'm sorry, I'll try and be quicker on it next time, but I want to make points here. This is important. Take a look at this. This is probably the most important part of the video, frankly, which is why I'm thinking in hindsight, maybe I should have covered this sooner, but it's really important. And this is why I hold my XRP. My gosh. Here you go. It's from Putnam Investments. It's just a firm out there. I've actually covered this exact slide in a video at, I don't remember exactly when, but it was a long time ago, beginning part of this year. Take a look at this. Time, not timing, is the best way to capitalize on stock market gains. That's the little heading for those of you not looking. Time, not timing, is the best way to capitalize on stock market gains, which means waiting rather than getting in and out of positions. And this is really impactful. Please stick with me if you can. If you just got another few minutes or so, I promise you, it's worth it. And here's what they write. By trying to predict the best time to buy and sell, you may miss the market's biggest gains. And so what's on the screen right now? Well, it's the S&P 500 index from December 31st, 2005 through December 31st, 2020. So a 15-year period right there. And they write, the U.S. stock market has been resilient throughout its history. Stocks routinely recovered from short-term crisis events to move higher over longer time periods. And so fine, we're looking at a 15-year period on this chart. It's true over 100 plus years. And again, these are the humans that you're competing against in the market, even in cryptocurrency. It's just more volatile in crypto for a number of reasons. Yeah, there's a frenzy around this new technology, so there's a lot of excitement, lots of participants doing ridiculous stuff. It's also true that trading occurs every second of every day, 365 days a year. But the stock market, business hours, because reasons, right? I know. Maybe one day that changes. But anyway, it is what it is. And it's so global. Crypto, I'd argue even more so than stocks, even though there's fewer humans today participating in crypto investments, but I still think that's true. And so they highlight these little things here that cause notable dips in the market, including this one, where I'm circling right now. The collapse of Lehman Brothers in September 2008 triggered a severe market downturn and recession. Within a year, stocks had recovered significantly. So let me ask you folks, and look at the chart on the screen if you're not driving or something like that. Do you think it made sense when everybody was selling down here to just sell? Did that make sense? Did that make a damn bit of sense? Or does data show that had you held right here at this bottom, which is the lowest point on this chart on the screen, had you just held, even after the massive losses, would that have been better over the course of the next 15 years? Well, not 15 at this exact point where I'm circling. 11 years, fine. You get the point, right? Selling when everybody else was selling because everyone else is doing it and it feels scary, was that good for you to do or not if you did it? Well, clearly not. You took a hell of a freaking beating if you did that. And look at this one. Here's the next one. The market declined sharply in 2011 when Standard & Poor's downgraded the U.S. credit rating but rallied soon after. How about that? Here's another one. In June 2016, U.S. stock prices plummeted more than 5% in the 2 days after the Brexit referendum, followed by a dramatic 3-day recovery. Shocking, right? Absolutely. Gasp. Ooh, can you imagine? I can. It's not hard to. I don't even have to imagine. It's like just data on a damn screen. Here's another one. The S&P 500 tumbled more than 10% on fears of a Fed policy error and a U.S.-China trade war in the fourth quarter of 2018. Look at all of this stuff, and it just goes up and up and up despite the massive pullbacks along the way. Relatively speaking, I know pullbacks in crypto much more massive. Fine, I got it. But still, the trend is the trend, my friend. And take a look at this. This is where it gets even more shocking. Take a look at this. Stay invested so you don't miss the market's best days. And folks, again, There's a reason I've not sold a single XRP, because my bet has been that the bubble that inflated to its top January 4th, 2018, would inflate way beyond that at some unknown point in the future. That has been my bet for years. That's it. That's it. I don't know how high it's going to go. I'm not so sophisticated as to get into the technical analysis, and I don't need to be. I'm not interested enough to be, and I'm just a regular Joe Schmo just like you, and you don't need to be. You need to understand some things. You need to control your damn emotions, and there is an opportunity to achieve life-changing wealth. That is firmly what I believe, which is why I've been doing what I've been doing. Take a look at this, though. This is how important this is. And again, we're talking about the S&P 500 here. This absolutely is true of crypto. $10,000 invested in the S&P 500 for that same 15-year period. So the end of 2005 through the end of 2020. $10,000 invested in the S&P 500, which is a stock index. Take a look at this. If you had stayed fully invested over that period, and again, I understand the percentage, I got it. It's nothing like crypto. It doesn't matter. Take the overall point. It applies to crypto. It's provably the case. Take a look at this. If you had stayed fully invested in the S&P 500 over that 15-year period, that investment of $10,000 would have become $41,100. That's a 9.88% annualized total return. I know, pales in comparison to crypto. I got it, but this is why this is exciting. Apply the understanding, and then think of crypto. Okay, apply the understanding here. Think of crypto. Think of XRP. Again, 15-year period, $10,000 becomes $41,100, 9.88% annualized total return. Okay, what if you missed the best 10 days over that 15-year period? Just 10 days. Mind you, there's 365 days in every single year. I'm not talking about leap year, of course, but 365 days. If you miss just 10 days over 15 years, if you miss 10 best days over 15 years, instead of that $10,000 turning into $41,100, your $10,000 is now only $18,829. My friend, do you really still think that it makes any freaking sense to try and time the market and get in and out of positions and sell this and that? Do you really think you're going to beat the data here? Do you really think you're going to do that? The numbers don't lie. I don't think I'm going to, so I don't do it. I don't. I just sit there and freaking hold. And I'm in the minority. But the majority's a bunch of freaking idiots. And I don't mean that in a venomous way. I'm trying to help here. Because this doesn't make any damn sense to be getting in and out of positions, emotionally responding. No. Okay, so what if you missed the 20 best days over that 15-year period? This is shocking. You know the number if you're looking at the screen, let me tell you. Or should I leave you in suspense for another 3 seconds? The answer was yes. What if you missed the 20 best days? That $10,000 over the 15-year period, the same 15-year period, you miss 20 days. It's only $11,400. You're up $1,400 or 0.88%. That's how much you're impacted if you're timing the market. Okay, what if you missed the 30 best days over that 15-year period? You're down. Are you hearing me? You're down 1.88%. Your $10,000 has now turned into $7,526. Getting bad, folks. Okay, but what if you missed the 40 best days? You're down 4.26%. Your $10,000 is now $5,205. Does this make sense? Does this make any damn sense to be jumping in and out of positions? Hell no, it doesn't. Like, my friends, like, that's why I keep saying, like, it's not rocket science, and I'm not pretending that there aren't additional complexities in crypto that don't exist in traditional markets, including stocks. I'm not saying that, which is why you better educate yourself on the differences too, because they're substantial, and there is additional risk that you need to be aware of. I'm not pretending there isn't. But look at the human behavior, because this is a core piece of it. Of course it's a core piece of it, which is why for me, I just sit around and I hold my XRP and I do nothing, and I have a high level of confidence that it's going to be worth substantially more in the future than it is today. And I don't know what that means exactly. I don't make price predictions. Nobody really knows for sure. But the market moves in tandem, and the market's a bull market right now. What the hell do you think is going to happen? Please tell me in the comment section below what the hell you think is going to happen. Like, there's so much reason to be just exuberant excited to like an endless degree. There's so many reasons that I look forward to running this Moon Lambo channel with a silly ass name every single day. Because it really is, this is a message that's got to get out there. I'm going to keep shouting it. Normal people can achieve life-changing wealth, and the way things are going right now, in short order, like compared to traditional markets, it is the case. And I don't know that most are going to, but most don't know what the hell they're doing, and they don't inform themselves of basic facts like this. So yeah, of course, do your own risk-reward analysis, decide what's right for you. I'm not telling you to buy or sell or hold anything, but damn, is this not worth knowing? Are enough people talking about this? I say no. I say not enough people are talking about this, so I'm going to. In fact, I promised I'm going to bring this up more frequently than I do. I'm not going to make it as long a video like this. I can't do that, and I don't want to burn anyone out or anything, but it's been a long time since I've talked about this, and this is actually super duper important to understand. Don't be like the typical person. Don't be normal. Be weird, like Moon Lambo, because normal people investing lose money. Okay, that's just my humble opinion, but I'll wrap up there. I'm not a financial advisor. You should not buy or sell anything because of anything that I say. All right, that would be a very, very, very bad idea. Until next time, to the Moon Lambo.